Money. It shapes our lives, drives economies, and impacts every decision we make. From ancient bartering systems to the digital currency revolution, money has been a constant force, evolving through time and transforming societies in ways we couldn't have imagined. But where did it all begin, and how did we end up where we are today? Join us as we explore the fascinating history of money. Chapter 1. The birth of money. Long before paper bills and digital wallets, people traded goods and services directly in a system known as barter. If you had a cow and I had wheat, we would trade. But what happened when the cow was too big to transport, or the wheat couldn't be traded easily? A need for something more portable, durable, and widely accepted emerged. This is where the concept of money was born. Around 600 BC, the first metal coins were minted by the Lydians in what is now Turkey. These coins were stamped with images and symbols that indicated value, becoming the first standard currency. It was a revolutionary shift in how societies exchanged goods. The creation of coins allowed for easier trade across distances, laying the groundwork for global commerce. For the first time, people could carry money with them and trade without the need for direct exchange. Chapter 2. The evolution of currency. As societies expanded, so did the need for more complex financial systems. Metal coins, while revolutionary, were limited by their weight and the fact they could be forged. Enter the first paper money, another leap forward in the history of currency. In China, during the Tang Dynasty, 618-907 AD, the government issued the first known paper banknotes. These notes, backed by precious metals, marked a new era in global trade, enabling merchants and travelers to carry large sums without the burden of metal coins. By the 17th century, European nations began using paper notes, and soon banks began issuing them. These banknotes were backed by gold, creating the first forms of what we call fiat money today, money that doesn't have intrinsic value but is backed by the government's promise. Money's evolution has always been tied to the state. With the rise of national currencies and the banking systems that supported them, money became a tool of power. It wasn't just about trading goods anymore, it was about controlling the flow of resources and wealth. Chapter 3. The birth of modern banking. With the rise of international trade came the need for larger financial institutions. The modern banking system as we know it began to take shape in the 17th century in Europe. The first central bank, the Bank of England, was established in 1694, and with it, the idea of regulating national economies through monetary policies was born. In the 19th century, the gold standard became the foundation of international trade. Nations tied their currencies to a specific amount of gold, ensuring a stable exchange rate. This system lasted until the early 20th century, when world wars and economic instability led to its collapse. The gold standard was crucial in ensuring that money had tangible value. However, it also limited how much money governments could print, which became a problem during times of economic crisis. Chapter 4. The fiat currency era. By the mid-20th century, the gold standard was abandoned, and nations began using fiat currency, money not backed by physical commodities but by the trust in the government's economy. This shift allowed governments greater control over their economies, but it also made money more volatile. One of the most significant moments in modern monetary history came in 1971, when US President Richard Nixon ended the dollar's convertibility to gold, effectively severing the link between money and a physical asset. This era has seen massive fluctuations in currency value, from hyperinflation in Zimbabwe to the rise of global financial institutions like the International Monetary Fund, IMF, and the World Bank. Chapter 5. Digital revolution. In the late 20th and early 21st centuries, the advent of the internet and technology changed everything. Digital transactions became commonplace, and the world saw the rise of electronic banking, online payment systems like PayPal, and, most importantly, cryptocurrencies. In 2009, Bitcoin, the first decentralized digital currency, was created. Bitcoin, and later other cryptocurrencies, operate on a technology called blockchain, which allows for secure, peer-to-peer transactions without the need for traditional banks or governments. It promised to democratize money, offering greater transparency and security. But, while the idea of digital currencies is revolutionary, it also raises new questions about regulation, security, and the future of traditional banking. Cryptocurrencies offer a radically different view of money, free from the control of central banks. But it's still early days, and the future of digital money remains uncertain. Chapter 6: The Future of Money. So, what does the future hold? As nations explore the idea of central bank digital currencies, CBDCs, we are witnessing the next evolution of money, a digital form of national currencies backed by governments themselves. With artificial intelligence, machine learning, and blockchain technology advancing at a rapid pace, we are on the brink of a financial revolution that could once again change the way we understand and use money. Money has always adapted to meet the needs of society, and as technology continues to reshape the world, one thing is certain: the story of money is far from over. From bartering with seashells to trading stocks with the tap of a button, money has been an essential part of our evolution. It has allowed societies to thrive, empowered nations, and shaped the very fabric of human civilization. As we stand on the precipice of a new financial era, we are reminded that money is not just a tool, it is a reflection of who we are, where we've been, and where we are headed.